Today we are going to talk about insurance deductibles, what they are, how they work, and what deductible you should select on your insurance policies. We're going to talk specifically about deductibles for both car insurance and home insurance. The deductible is the amount of money that you are responsible for paying in the event that you file an insurance claim. In other words, the deductible is the amount of money that the insurance company subtracts from your claim. In the event that you file a claim, the insurance company owes you money and they send you a check, they will subtract the amount of the deductible that you have on your insurance policy. When it comes to home insurance and car insurance, the deductible is not an annual deductible. A lot of people get it confused because with health insurance, a lot of times the deductible is an annual deductible. With car insurance and home insurance, it's a per event or per occurrence deductible. So every time you file a claim, even if you file a claim 1 week and the very next week you file another claim, you have to pay your deductible. Now it's important to point out that every time you file a claim with your car insurance or home insurance, you don't have to pay a deductible. The deductibles only apply to specific coverages on both your auto and home insurance. For the most part, when it comes to car insurance, you have a deductible for comprehensive coverage and collision coverage. For your homeowner's insurance, you would be responsible for paying a deductible if you filed a claim under your dwelling coverage or personal property coverage. For all the other coverages, for the most part, a deductible is not needed, is not necessary. So now let's get specific. Let's talk about car insurance and how your deductible works in the event that you file a claim, whether you're at fault or not at fault. So when you file a claim and you are the at fault party, it was your fault, you caused the damage to your vehicle, and now you're filing a claim through your insurance company. Let's talk about how that deductible works. The first thing to point out, because it's a question we get often, is no, you do not have to take that money and write a check or go hand cash to your insurance company. You are not physically paying that deductible to your insurance company. Instead, like we mentioned before, the deductible is simply the amount of money that the insurance company is going to subtract from the final payout. So, for example, you have a vehicle, you cause damage to your vehicle. Let's say the damage is $10,000. That's how much it's gonna cost to take it to the shop and get it fixed. The insurance company will write you a $10,000 check. However, you have a $500 deductible. So they will write you a $10,000 check minus your $5,000. So you'll actually get a check for $9,500 from the insurance company. At that point, you can go down to the body shop where your car is getting fixed. You can give them that check for $9,500, and then you would be responsible for paying the body shop the additional $500 because that's what your deductible is. So now let's talk about what happens when you're in an accident, there's damage to your vehicle, and it was not your fault. In that case, you have two options. The first option is to file that claim through your insurance company. The second option is to file the claim through the person who hit you or caused the damage through their insurance company. And we're gonna talk about what happens in each scenario. Like I said, you have the option of filing the claim through your insurance company even though you were not at fault. As long as you have the right coverage, generally comprehensive or collision, your insurance company is going to pay to repair or replace your vehicle. Even though you were not at fault, your insurance company will still pay for it. However, if you run the claim through your insurance company and have them pay for the damage to your vehicle, you will be subject to paying your deductible. You're gonna be on the hook for your deductible. Sounds a little weird, but keep listening. So what happens is after your insurance company pays to replace or repair your vehicle, and after you pay your deductible, the insurance company then goes after the other person, the person who was at fault. They go after their insurance company and they do what's called subrogation. Essentially, your insurance company goes to the other insurance company and says, hey, it was your insured who was at fault, but we paid to fix our insured's vehicle. You owe us $10,000 because that's how much we paid to repair or replace this vehicle. And so what happens is once that process is complete and the at-fault insurance company pays your insurance company, at that point, your insurance company will refund you your deductible. So you have to pay your deductible initially, but you will get it back as soon as subrogation is complete. You may hear that and wonder, okay, why would I run the claim through my own insurance company if I'm going to have to pay my deductible? Well, it's your insurance company. Your insurance company has a duty to protect you and to help you. And so a lot of times it's faster and it's easier to run that claim through your insurance company. Even though you had to pay your deductible initially, you know that you're going to get it back once subrogation is complete. And now the second option that I mentioned is you can just run the claim through the at-fault party's insurance company. In that case, you are not going to have to pay a deductible because you are not at fault, and their insurance company will take care of everything. This sounds a lot easier, and sometimes it can be. However, many times, because it's not your insurance company and they don't have a duty to you, they will take their time, they'll give you the runaround, they may try to not pay you as much as you need, so it can cause extra headaches by doing it that way, even though it sounds a little bit easier. However, most of the time, if it's a reputable insurance company, they will take care of you and you'll be just fine running the claim through them. But if you have any questions or you think you're not going to get your claim taken care of through the other insurance company, just go to your insurance company, they'll pay for it, you'll pay your deductible, but you'll eventually get that back. And now the third thing that I didn't mention, but we need to mention here, if the other person that hit you and caused damage to your vehicle has no insurance or they don't have enough insurance, in that case, you are going to just have to file the claim through your insurance company and you're gonna have to pay your deductible, and there's no insurance company to go and subrogate against. So you're just out of luck when it comes to paying your deductible. However, at least you still have the coverage and it's only $500 or whatever your deductible is out of pocket. Speaking of deductible amounts, they usually give you the option to purchase a $0 deductible, a $250 deductible, $500, $1,000, $1,500, all the way up to a $2,000 deductible. Now, sometimes on some homeowners insurance policies, they don't give a set dollar amount for your deductible. Instead, you can select a percentage deductible. Usually it's 1% or 2%, sometimes a little bit higher, but that percentage is a percentage of your dwelling coverage. That's the first coverage that is listed on your homeowner's insurance policy. So for example, you have a $500,000 home, that's the dwelling coverage amount, $500,000. You have a 1% deductible. So your deductible would be 1% of $500,000. So you would have a $5,000 deductible. Now, as an insurance broker who's been in insurance for a long time, what do I recommend when it comes to selecting your deductible? Because a lot of people say, oh, I want a very small deductible in case something happens. I don't want to have a huge out-of-pocket expense. That's one way to think about it. However, my advice, my opinion would be get the largest, the highest deductible that you can afford, because by doing so, you are going to cut down on your monthly insurance premium. So in other words, the higher the deductible, the lower your insurance premium is going to be. And I say that to save you money on your monthly insurance premium, but also we have other videos that talk about not just filing claims willy-nilly. You know, you see some damage for $1,500, you run out and file the claim. That is not something that we advise doing, because the more claims that are on your insurance policy, the higher your premiums are going to be. You only want to file claims that are large and catastrophic. That's the point of insurance. That's what insurance is there to protect you against. So we don't want to file lots of claims. We want a higher deductible, the highest we can afford, and that is going to knock down our insurance premiums on a month-to-month basis. So that's it, guys. That is Insurance Deductibles 101 in a nutshell. Hopefully that helps you. You can go out and check your deductible, and then the next time you're in an accident or you have to file a claim for your homeowner's insurance, you know how deductibles work. As always, guys, if you have any topics you want me to cover, please let me know. The whole point of all these videos is to further educate you so that you know what you're paying for in your insurance policy and you can continue to build your better future. Thanks for watching, guys, and we will see you in the next video.